Taking a look at today's interest rate markets, let's take a look at the 10-year note futures as they had quite an interesting day today. We are seeing them higher on the session, although only slightly higher now. And that trend has been established now for 5 out of the last 6 trading sessions. We have seen the 10-year note futures higher, currently right around the 132.23 level. But we did see them push into the 133 handle this morning, and that was really due to the unemployment report, which was released this morning, and the job creation number was much lower than what was anticipated. And therefore, we did see that big spike in the 10-year note futures initially because of the indication that maybe the economy is not running as hot as what the expectations were based on the lower number of job increases than what the market had anticipated. But throughout the day, we did see, basically drifting back down and still, like as I mentioned, holding on to a slight gain. But the yields are pretty much where they were when we started the day. Right around 158 basis points now on the 10-year note futures when you look at the yields on those futures. And so it is an interesting dynamic. I do want to point out that the yield curve has shifted quite a bit today. We're seeing significant pressure or buying pressure in the short end of the curve, so we're seeing yields still down on the session. As you move out on the yield curve, though, when you get out to the 20s and 30s, we're actually seeing selling pressure late in the day today, and we're seeing those yields actually being pushed higher on the session. So shifting yield curve today, the 10-year note futures basically back to just slightly higher on the session, 158 basis points on the yield, but the back end of the curve yield shifting higher, the front end of the curve yield shifting lower, and therefore we are seeing the curve steepening as the day moved forward.